Thanks. Let's bring in our market panel now. Joining us for that is Krishna Memani, Vice Chairman of Investments at Invesco, and Mike Santoli, CNBC's senior markets commentator. It's not December yet, Santoli.
Nope.
It's another 2 or 3 weeks of a Christmas rally, if it were to happen. And I'm not saying it will, but the default every morning seems to be green.
So far, yeah.
And we could.
Last week was interesting because it was like this barely perceptible shakeout. And I think a lot of people said, okay, maybe we finally get it down 2%, just a little bit of a pullback to buy. And yesterday had the feel of people feeling like, I'm not sure if I can wait for that. The market doesn't seem like it wants to give. So there was a little bit of a chase and a little bit of empty the tank and get the S&P to exactly a 25% year-to-date gain by the close. Russell 2000 breaks out of its range. It's hard to find fault with what was going on yesterday when Apple, Microsoft, JP Morgan, all-time highs. The only question is, are people just kind of, emptying the tank early before we get into, December or January when you have to figure out if the numbers make sense?
We might have been flat last year, but if the headline on December 31st is a 25 or 30% gain in the S&P, I mean, you can't really discount that even if we were flat in 2018. That's a big year and the biggest in more than a few, right?
So I think what matters is, one, we have had a really good 2019, and second, that we are at all-time highs. So I think that sort of tells you how the people are feeling about things. To Mike's point, I think there's a decent chance that December actually ends up being softer than it typically has in these types of years, because we have already priced in a lot of the good news, whether that is with respect to the Fed, whether that is with respect to the reacceleration, whether that is with respect to
what do you do?
Trade
Just trade flat, just low volatility?
Yes, exactly. And I think that is going to be the story for all of next year. It's going to be one of the lowest volatility years we have had in a long time.
Even with the election?
Even with the election. I think because what is going to drive that more than anything else is the fact that the Fed is on hold. They're not easing and they're not tightening, and they're expanding their balance sheet.
So if Bernie Sanders is a Democratic nominee and he's favored in all the polls, you think it's just going to be quiet, no volatility?
So as an investor, I'm a betting man. Am I assigning a very high probability to that outcome? The answer is no.
What's the probability it's someone other than Donald Trump?
Well, I think there's a decent chance that it is something.
Then who's it going to be? You got your choices. Deval Patrick? He seems like a good guy.
So I think part of it is either it's the mayor or the previous mayor or it's Elizabeth Warren. The real issue is how likely do you think the policies of the union are going to change in a meaningful way in the current construct? And that's what people are going to focus on in 2020. And I don't think that is going to be as significant as people are making it out to be today.
We've seen what these presidents, both Obama and Trump, can do with a pen. If Elizabeth Warren became president, she doesn't need Congress to do things to absolutely throw a complete wrench in the works.
Well, I think that is possible. Would we assign a significant probability?
To her? No?
Well, no, I don't think so.
Who besides Trump then? Bloomberg? I don't think that's...
So I think it could be any one of them.
I don't think we have enough information to know, or even for the market to start to handicap.
Why? It's all out there. We got to be...
No, people haven't voted yet.
Change so drastically.
It doesn't happen in the first half of the year.
We know who the choices are, don't we? Or are there going to be more?
Choices are. It can go multiple directions within that.
Got a new candidate added this week.
What would happen with any individual elected, re-elected, or for the first time?
It's choices and what policies they would implement and the likelihood of those policies getting implemented. And I think even if there is a reason to worry, it's not in the first half of the year. First half of the year is going to be one of the least volatile year we have had in a long time because of the setup that we have on trade and policy.
Frozen in some potential plays.